Hi, Assalamualaikum and welcome. Today, we are reviewing a compelling study titled Rethinking ribā and Islamic banking experimentation, co-authored by Waqas Al-Hadir, Muhammad Arsalan Abu Aziz, and Dr. Abdul Ghaffar. This paper was published in the Living World Journal in July-December 2021. The authors critically examined contemporary Islamic banking and finance. They argue that while the industry has surpassed $2 trillion in debt, it has drifted away from its suitable profit and loss socialist ideals. Instead, it has largely resorted to legal stratagems and debt-based structures that mimic conventional banking. To explore this, the study drives four core research questions. First, do existing Islamic banking guidelines take through economic systems? Second, do these principles effectively foster human economic development? Third, why do these controversial legal uses persistently survive in the Islamic institutions? And finally, how has a misconstructed understanding of ribā over centuries contributed to the economic underdevelopment of the Muslim world? Ultimately, the authors emphasize that the path forward requires a dynamic, collaborative ijtihad in defining ribā through modern agency purely to protect property rights, eliminate wealth extraction, and secure true financial
Next, let's move on to the summary of the article. Does Islamic banking reflects the true principles? This article examines whether Islamic banking truly reflects the original principles of Islamic finance. The authors argue that the main issue is not Islamic law itself, but the narrow interpretation of ribā and the tendency of Islamic banks to focus more on legal form than on the real purpose behind the transaction. This study used a conceptual and theoretical review, so it is based on existing literature rather than new data collection. Besides that, the authors find that many Islamic banks still rely on debt-like products, especially murabahah, instead of genuinely profit and loss sharing. They explain that this happens because of regulatory pressure, liquidity constraints, information asymmetry, and competition with conventional banks. So, in conclusion, this article shows that there is still a clear gap between the ideal and the actual practice of Islamic banking. The authors suggest rethinking ribā through a broader and more dynamic ijtihad so that Islamic banking can promote justice, financial stability, and economic development.
Today I will take about two questions in this article. First, the author is brave. The author used strong words like uses and sophistry on page 2. On page 30, the author said Islamic banking is like an old Christian trick to avoid usury laws. On page 40, the author asked why Islamic banking not Islamic at all. He is so brave. Most writers are not this brave. Second, this article talks about real life. On page 3, the author said Islamic banks were safe during the 2008 crisis. On page 20, the author said sharing risks to financial problems. So, banning ribā is not just elegance, it is also good for money and economy.
Next, weaknesses of the article. One of the weaknesses is lack of empirical evidence and practical data. The discussion is mostly theoretical and conceptual rather than based on the case study, statistical analysis or field research. Although the arguments are intellectually interesting, but the articles provide limited real-world evidence to prove that Islamic banking has failed to achieve its objective. For example, the authors critique Islamic bank for imitation conventional system, but they do not provide detailed comparison, financial performance data, or customers impact study to strongly support this claim. Next is oversimplifies the challenges faced by Islamic banking institutions in the modern financial system. Islamic banks still operate within global economic structures that are largely controlled by conventional banking regulations and financial practices. Therefore, it is difficult for Islamic banks to completely avoid conventional elements. Although the authors strongly critique current Islamic banking models, but they provide only limited practical alternatives to replace the existing system. The discussion focused more on theoretical critique rather than explaining clear implementation strategies or realistic solutions that can be applied in the real banking industry.
Now, I will present which claims are strong and which are weak. First, DCR makes Islamic banks stay away from PLS. This is wrong because the author showed a picture on page 7 and 8. Second, FSB gives 4 times risk weight to PLS. This is wrong because the author showed a table on page 9 with numbers from 6 countries. For the weak claims, the author say wrong meaning of ribā make Muslim countries poor. This is weak because there is no real proof. The author say intuitive on page 4. That means just his own idea but not real data. So claim with picture or number are strong.
This article discusses the gap between Islamic finance theory and the actual practice of Islamic bank by today. It also focused on the important concepts such as ribā, Sharia compliance, and maqasid al-Sharia. The article is explained why many Islamic banks right now is rely more on the debt-based financing like murabahah instead of the profit-sharing models such as mudarabah and musyakarah. It also highlights the issue like weak governance, moral hazard, and information asymmetry in the Islamic finance. Overall, the article emphasizes the needs of innovation, ethical value, and dynamic ijtihad to create a more authentic and sustainable Islamic financial system.
As we go on, modern Islamic banking has a major flaw. It often just mimics conventional debt. To fit this, the research outlined a 3-phase transition. First one is short-term. We must move from mere legalistic compliance to true ethical acceptance. That means shifting away from debt like murabahah and moving toward real equity-based models. Second one is medium-term. We need a hybrid financial engineering. This means blending traditional Sharia principles with modern fintech to create competitive risk-sharing products. Last one is long-term. We need a total paradigm shift by bringing together economists, sociologists, and scholars. We can build a system that genuinely prevents exploitation. We have to move beyond just checking legal boxes and finally deliver true socio-economic justice. Moving on, there is a gap between Islamic finance theory and how it actually works. To fit this, future research needs to focus on 3 big changes. First, we need a smarter financial engineering. Stop making products that just copy conventional debt. We need a genuine win-win profit sharing models. Second, fintech like blockchain to solve the trust problem. Transparent tech means businesses can't hide their profits, making risk sharing safer for everyone. Finally, integrate social finance like wakaf and zakat directly into commercial banking to actually write property. The goal isn't just to be compliant anymore. It's about using tech and better design to create real economic change.
Based on this article, we can conclude that Islamic banking was introduced to provide a more ethical and Sharia-compliant alternative to conventional banking. However, the authors argued that many current Islamic banking practices still closely resemble conventional interest-based systems. The article also explains that ribā should not only be understood through narrow legal interpretations, but through its broader purpose of preventing injustice and exploitation in the current society. Therefore, the authors suggest the need for a more dynamic and contemporary approach of ijtihad, where Islamic scholars and economists work together to improve the Islamic financial system. In the end, Islamic banking should not only avoid interests, but also uphold values such as fairness, transparency, social welfare, and sustainable economic growth. Thank you.